Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Inflation's not dead yet. Well, I've obviously discussed the inflation topic many times over the past couple of years, and it continues to be a hot button item for the markets. Earlier this week, the Consumer Price Index inflation reading for March came in a bit higher than expected, and markets proceeded to drop in excess of 1% on the headline indexes. 86% of S&P 500 stocks were down an average of 2.1% this past Wednesday. And interest rates rose as traders went from pricing in 3 rate cuts by the Fed to only 2 in 2024. The 10-year Treasury is now nearing 4.6% after being below 3.9% as recently as the beginning of February. Now, if interest rates are going to stay higher for longer, and if inflation is an ongoing issue, that could cause further volatility in markets as we move throughout the year. Nevertheless, if higher rates and inflation are actually a sign the economy is accelerating, it could ultimately help drive markets higher, for a while at least. For this week's featured insight, bonds aren't always safe. Most people believe that bonds are a safer alternative to stocks. They usually produce lower rates of return, but with less volatility or risk. Now, this can certainly be true, but the bond market is a complex animal. Not all bonds are created equally. Long-term bonds are very sensitive to higher interest rates and can fall substantially in value when rates rise. Now, you may ultimately be made whole, but you could have to wait a while until the bonds mature for that to happen. In the case of a 25 or 30-year bond issue, you might be waiting a while. In addition, low-quality bonds that are issued by shaky companies could potentially default, meaning the company could fail to pay you interest or principal in the event of a bankruptcy. Now, bonds can be an essential part of a well-diversified portfolio, but it's important to know what you own and how it will react based on changing market conditions and interest rate fluctuations. Looking ahead, another earnings season is upon us. Well, first quarter earnings season will begin next week with the large banks first out of the gate as usual. We'll get some insight into how well businesses performed in the first quarter, and more importantly, find out more about how they see the rest of the year developing. Despite the rather strong stock market performance in the first quarter, earnings estimates for this year have actually been falling since January. And this isn't abnormal, since estimates usually come down ahead of earnings season to allow companies to beat expectations. But what will be important is to see if estimates fall by more or less than they fell last quarter, which was a drop of 1.9%. Stay tuned. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.